Hello and welcome to the Wednesday check-in brought to you by David Gockstein. I'm your host, Landy, and today is July 8th, 2026, and we're looking at Bitcoin on a higher term time frame. Main reason why is because of the discussions surrounding where a potential macro low could come in. Obviously, it's continuously talked about by analysts and pundits and non-technical and technical people, macro people and non-macro folks, and just people with an opinion. Where is Bitcoin's macro low going to be? And while I've described what it is that I'm looking for based on some conditions, I wanted to point out that it is really frustrating to see people who opine on this subject calling this a macro low right now when it is actually a lower low on Bitcoin. That doesn't mean that it can't develop into a macro low. So I just wanted to revisit some of the criteria, some of the importance of these levels, in particular, the most recent shot below 58K, and in particular, some important monthly closes, and what that looks like, and why I look at things in a conditions that need to be met type of a style. And this has been very good for my analysis for a very long time. But more importantly, when trading or accumulating or investing, it has helped me define the conditions that I'm looking for to find value when something is undervalued versus overvalued, or discount versus premium. And I want it to be known before I get into this that I believe that Bitcoin at these prices and lower, no matter how low it goes, is all discount, it's all value, and it's all accumulation time. And especially when considering the time period and time frame in which we are in terms of it being the summer, and then moving into fall, which is going to be a lot faster, I think, in terms of what people perceive as their perception of how long things are going to take. I think things are going to happen a lot faster than people expect. When you're in it, it seems like a grind, but looking back, it's going to be a blip on the radar. And this is the time period in which you want to be in markets. This is the time period when you want to be identifying or have already identified and began to get into the areas of interest in terms of investment or potentially setting up longer term trades if you're a very long term time frame trader, which usually is going to involve less of a trade and more on the investment side anyway, mainly due to fees, long pay short, and all that kind of stuff. So, but in this case, we're looking at the monthly to start. We're going to drill down to the daily because Bitcoin did meet some conditions to head down and test the low that I talked about on Monday. So Monday's low area has been tested, has been swept, but that area has been tested. So let's roll back for a moment, and I'm going to walk you through some methodology just for a second here. Very simple, high-level stuff. We've got the closes here, in particular the 58.8 area that Bitcoin did close below. Excuse me, been talking all day, so I am losing my voice. I apologize. We have between the two closes, one at 58.8, one at 61,360 or so. That's pretty much, that's your monthly closing zone. That's the prior all-time highs, right? And this is something that, well, we're used to Bitcoin testing in a bear market now since we had a reclaim of the prior all-time high swing in the 2022 bear market low. So this is not really out of character now. Then we have the swing zones for these monthly term time frame highs, which of course is 65 to 69K, right? Or thereabouts. I think it hit 69 exactly on like Coinbase Spot. But you can see where we're rejecting, right around 60, right around the 65K region, after putting in a lower low structure and confirming, more importantly, right here, confirming a lower high right? So this is the lower high to beat, right? As it stands right now, this is the lower high to beat. So I want to have this discussion not in terms of like, hey, this is what I think is going to happen, but more importantly, what to look for in either continuation or on any subsequent stronger bounces in Bitcoin from these regions. If they do occur, if we don't get continuation, right? Which the next big area is pretty clear, right? From a monthly time frame perspective. Yes, there is some close opens over here in and around the $47,000 area, but you can really take the bear market lower high because that is a structured closing high, right? At 45 to 48 as the next big area to the downside. And you can, if you would like, mark off the inflection point where we had the previous high time frame orders coming in that did break that high at 48 240 or so for spot. And then, of course, that was the pre-ETF high into another big area, which was the 38.5, which was the post-ETF dump off. And then we had the big February candle in 2024 that took things back to the prior all-time high area of interest. And then we went and retested that, and that was right around 48 to 50K, depending on the chart that you're looking at. So if you want to take that as like the next big zone, then you can. And in this case, this is what I'm paying attention to, right? Because we did get a close below, and if it's going to be a deviation of the closing structure over here, great, fine. Let it be what it's going to be. Don't try to force your own determination on it, but make sure that you have the levels down below should we get continuation to the downside. Now that that's been said, it really is very clear what's going to come next. If this is going to continue the downtrend, well, we know where we want to look from a macro time frame perspective. We want to look to some of these areas down here, right? That doesn't mean that it's necessarily going to hit those areas, and that doesn't mean that if it hits those areas that it's going to hold. But that is the base case of the thesis for support and resistance when in a downtrend, specifically because we are in a trending structure that has broken the higher low and now confirmed a lower high trend reversal setup. So what would be the counter or the antithesis to that would change things? And potentially, if the current lows hold, or if we just get a nice swing down, we don't complete a move down, or even if we do, what does it look like? And how about we do that first? What would it look like if we actually moved 45 to 48 and that ended up being one of the bottoming structural areas of interest? Well, if we have no other lower high than the 82,800 high here, then that is going to be the trend break, right? So there's really just, there's three main scenarios, right? You either get a trend break, right, to a higher low, and then that higher low becomes the trend reversal setup, right? And in this case, this would be your trend break to trend reversal type of a look, right? And this would be, for me, I'd be accumulating on the way down, but also be in other major areas if I saw a higher low and it didn't continue down to hit further orders to the downside. And then, of course, the trend reversal setup off of something like that would be, you've broken the downtrend to trend reversal. And then there's the other variety of this, which would be another lower high, right? So say there's another lower high, and then we get a higher low or equal low setup, right? That is local. Then you have a trend reversal setup to a potential trend break. So I'd be in on the higher low either way. But, this would be the trend reversal criteria at, 68, let's call it, or wherever I have this marked off, right? Fact of the matter is right now there is no low set, right, on a closing basis at this particular moment. So But that would be, bottoming structures from the current structure if we took another leg down, right? And then you get the lower high trend reversal to trend break of this lower high over here. And then we begin a market structure shift, right? And that's something, to pay attention to. The other alternative, obviously, would be just continuation down, right, to the next bigger area of interest, which would be around this low side structure that was a failed closing low, but was a swing low structure from the low 30s to the upper 30s here. And that's where you get the big areas of interest. And you can take the close into account here at 35. You can take the swing at 32 or 33. Whatever it is that you like, however you like to actually define that criteria. I mean, obviously, if we broke down below 33, then we're looking at, this structure over here, which is down in the 30K and upper 20 area. But that's not a projection or prediction. It's based on conditions for closes, in particular for closes. So the other way that we could see things play out if we don't see price go lower and we see some sort of a structural shift right from here, well, what would that look like? From here, there's only one viable bull path, in my opinion, although we would have to evaluate, but it would be a trend break above 82.8, put in a higher low trend reversal setup, and then that would form your bottom. Whether, as long as this low here comes in as an equal low or lower low, or minimum if it sweeps the low after a trend break, that it closes above this low side structure at 57,750, right? Doesn't matter really what it looks like. All that matters is the actual trend break and then the trend reversal setup, and then same kind of criteria. You get a lower high, then that becomes the criteria, right? For the trend, this would be a lower high to higher low equal low trend reversal setup, and then that criteria would march lower for the criteria for actually doing the trend break. So it'd be trend reversal to trend break instead of trend break to trend reversal. So I just wanted to kind of clear that up. Is there areas of interest to the downside? Absolutely. Does that mean that it's destined to hit those areas of interest to the downside? Well, no, but there's nothing here right now saying that that this move to the downside is over. In fact, with the June close, it is heavily favoring a further move down. And that's where if we continue to hold this area and we meet criteria on the daily in those lower term timeframes that turn into weeklies, that we can really evaluate whether or not this is going to be a good candidate for a macro low area. And at this particular moment, we don't have that criteria. So if we go to a weekly, what does that look like? On a weekly, that's pretty simple, right? We had a shorter term time frame uptrending structure here on the weekly. We would have needed to regain the overhead resistance and meet some criteria for the monthly that we did not see met, right? What did we see? We saw the high come in right at a retest or a bearish retest of the previous higher low of the bull market, right? So from the weekly perspective here, that was just a bearish retest. It was fun, right? Off of 65 up to 82.8. I had some fun. I traded it. Made some good money on it. I hope that you did too. We were talking about that setup, and it was something that we were tracking on a daily basis as well for criteria being met to continue up for that retest, 80 to 82.5 or so, and we swung it at 82.8. So now what would the criteria be for the weekly to turn around? Well, we need to see a low set on the weekly. So first things first, I personally would need to see, a low set, any kind of low above last week's high would technically set the low, which would be at right around $64,000. But that doesn't get Bitcoin above any of the major resistances and starting to push towards other resistances, because 65K is such a strong area. The 62.5 to 65K, such a strong area of interest. and is resistance right now, as Bitcoin has fallen away from that area after pretty much filling out the criteria that we talked about on any reclaim of 62.5 on a daily close. Looking right around 65. We got to move just shy of 65, and then it's right back down, but still trying to hang in around the low 60s. But in this case, we would need to see a low set. And what I do find interesting about this area is if it does hold up, right, and we see a low set, we're either going to get a lower high to higher low on the weekly and then try to come up and take out that monthly lower high, which the weekly then would be indicating a monthly trend break if we see the monthly close above there, even if it's just ever so slightly. But right now, like, this would be one of the paths. You get up into the 70 to 72, maybe even push towards 74, 72 to 74, and then come back down for higher low, equal low structure. And it really doesn't matter where the low comes in as long as the low does not pass the actual low over here on a closing basis, and preferably on a swing basis. You would want to see it get front run. That then can take out the lower high, because that would be your trend break to trend reversal setup. So your trend reversal to trend break, rather. So you would want to see something like this on the weekly. That would look pretty good. And you would have, higher low, equal low as it relates to this low as a trend reversal setup to trend break. Or you look for something that is going to meet the criteria of a trend break to trend reversal. So you look for something like this. Ends up being, more acceptable, and to many people would be seeing a trend break to trend reversal, because price gets further away than before. But, realistically, we've already seen a failed rally with higher low structure with a trend break. So trend reversal to trend break, but right into resistance. So you still have to be careful with those, because this turned out to be a macro deviation, and it led to lower lows. We're now in higher high, lower low structure. So we're either going to get a bounce to a lower high that gets continuation, right? So we come off this low, we get lower high, and then we see that would be your trend reversal to the downside with a lower high and then a lower low for continuation down to lower prices. So essentially you have uptrending structure with higher highs, lower low, lower high, lower low, or we get lower high, higher low, higher high, or we come up in trend break. So move from higher high to lower low to higher high, which honestly is kind of rare. It's very rare to see that, but it's not out of the cards for something like Bitcoin. There is examples of this on the chart prior, but not many. It would be very rare, but not out of the realm of possibility for Bitcoin. Not the first thing I'd be looking for, to be honest. So realistically, it's about defining the criteria that you're looking for. So if you want to see this low set, of course, it would be a lower low on the weekly. And I would want to see above right around 65.7 and higher to see the low actually set here, even if it were to be set technically on closes above last week's high, which is what you would which is essentially what you would see on most indicators. But that's not something that I would take as for me personally as lows in. I'd want to see closes for the weekly coming in above that 65, 7, 8 region and starting to push on towards 68 to 70. So very, very simple, very, very easy to understand, I hope, in terms of setup. And what I'm going to point out here with the bands is that the bands are in expansion, and Bitcoin is trading and closing candles below the basis band, which is right around $70,000. So it's at 69,850 right now. If this week's candle turns green, this will be more towards 70K. Now, one of the things to watch for is typically what we see is in expansion mode. We get the initial expansion, get some mean reversion, and then we come down and we start really plumbing the depths of that lower second and possibly below. But typically we'll see a reversal off of that area, often back to the mean, and then sometimes above it, like what we saw with the retest in towards the 82.5 monthly. But now it's right back to the lower second. So the criteria is very clear. Continuation of expansion to the downside below the most recent low. And I would say it's probably safe to say any kind of closes below 58 are going to continue down to test the lower second and potentially more into the mid 50s and possibly low 50s, even with a price replace band around 48 to 50, which again is right around the bear market lower high to that ETF zone, that spot ETF zone, 48 to 50 essentially. So that would then open the door for 45.5, which is the bear market lower high from last cycle's bear market. And that was the close open. So the criteria is very, very clear. There's not really much in question here. This is not macro low in. There is anyone who actually does any type of analysis and is being honest is not going to say macro low is in. Anybody who's honest is also going to say that that doesn't mean that a macro low can't form here, right? Which means that, yes, the door is open for a macro low to form here, but that is not the most statistically likely look at this particular moment. We need to see price action develop some more in and around these areas. And even if we got to sweep into the mid 50s, as long as it's closing above 58 to 60, probably looks pretty good to at least set a low. And then we just take it from there once it sets the low. So this is a move in progress until the low is set. And for me, that's going to be, above the 65, 7 to 8 region. That's when a low would be set. Otherwise, you have to pay attention to that downside and continuation lower into the mid 50s as a high probability. Unless we see a low set, then we can start entertaining possible moves higher, especially on closes above $65,000 in this case, right? So let's go ahead and turn on the support and resistance zones of interest and kind of dig into that a little bit further. And yes, today is going to be pretty much all about Bitcoin, with the exception of I will take a look at oil, and a bit of a told you so. When it comes to the Iran situation, the MOU. I've said this before on David's show. I've said it here as well. It's an agreement essentially made to be broken. And for those that maybe don't understand the dynamics of the situation, unprovoked action can be taken when there's a credible threat for 60 days. And then once that clock ran out, what did they do? They went to ceasefire and then to blockade, then to MOU. And if there's violation of the MOU, you can bring up another operation name and you can do retaliatory strikes. But unprovoked, full operation would have to be a new name. You get a 60-day clock again. So anyway, yes, we're seeing some volatility in oil markets, but let me tell you something right now. When I do get to oil and I talk about oil, one of the things that I'm going to say is it was telegraphing what was going to be happening anyway in the prices off of a major monthly area of interest. So nothing was surprising about oil getting a bounce off of that zone at 68 to 70 or so. Now for Bitcoin, pretty easy setup here on the daily. We did see that if we came down and tested the Monday low, if we see 61 to 61.2 dropped, look right back to 60K, 58K right down here. So 58 to 60, which would encompass this wick low down here, which is outside of the primary zone of the monthlies, which would be 58 to 60, essentially lower second to lower first. And if we start seeing any closes below the lower second, we've either already likely ran the low and lower, or will run the low and lower. And on any kind of drop of that, we'd be getting expansion to the next level, mid 50s, fair game on the top side of the weeklies here, 54 to 56, and then 54 to 52.5 down there, fair game. If we do see price drop, 61 to 61.2, look for 60 and that 58 region. If we get a bounce, that would be a higher low on the daily after a bit of a trend break, which was a local structural trend break on the daily there at 61 to 60,800. So we have higher high. You'd be hunting for higher lows essentially in there. Just be careful. That's all. If we did see that. But it would be a good candidate for a potential higher low reversal setup on the daily. And you wouldn't want to see this like rocketing candles down there. You want to kind of see it gradually come down into those areas if it's going to be a solid candidate, and start to find higher volume in these areas off of these major areas. 58 to 60 is what you would want to see for reversal. So basically get high volume that essentially stops the any kind of move down there and then starts to reverse it in potential higher low fashion. And then back above, 65, we can look towards the high there, 65.6, 65.8. Anywhere above there would be above the upper second. Start looking towards it for expansion. Upper third will lurch towards 68. Start taking the daily zone 68 to 69 into play. But realistically, it's 68 to 70 and then up to 72 up there, which is the next major zone of interest up here, which is big weekly zone between 70,500 on the bottom side and 72 to 250 area to the top side there. So right now, criteria is very clear. Close above 65 is going to look pretty good for the bulls. Closes below 61, we're either already running 60 or will likely run that 58 to 60 level next. And then beware of closes below 58. That would initiate expansion to the downside. And any closes above 65 essentially would initiate expansion to the upside, at least to test local structure on the swing fail over top of 65, and then potentially the actual high that was put in up there on its way to try and test 68 to the weeklies at 70 to 72. So pretty straightforward stuff. Momentum, bulls want to hold up here, especially in the strong half of the basis band. The strong half of the bands above the basis band here on closes, that would look good. And any kind of daily closing reclaim of 62.5 is going to bring 65 back into play. So let's go ahead and take a look at oil. This was not a big shock, by the way, for anyone that's been paying attention. I pointed out the basis band on Monday being in and around that 74 to 76 area. And we got 76 bucks a barrel on WTI oil. Pretty much a perfect clean close open and retest of the monthly down here at 68 bucks. So realistically, there is just a giant continuation move down. So wherever the high comes in, it will be a lower high, and then we have to beware of higher low, equal low trend reversal setups for oil on the daily. Any kind of closes back above 76, we can start looking towards 78 to 80, and that would be with the upper first falling. Anywhere above there, that really does clear the path to the mid 80s, 84 to 86 being fair game from there. Last high, closing high that we have, like true closing high, is much higher. I mean, we're looking at this high up here for structural closing high, and that's 95, 97 bucks on the swing, 95 on the close. So realistically, we're looking for lower highs here, and then it's all about potential trend reversal setups wherever the high comes in. So it doesn't really matter if the high's here or higher, whether it's here or higher. It's all about trend reversal setups, right? So that's what I would be aware of. If you're looking for a deviation of trend, you want it just to see you want to see a higher high, another lower high, and then continuation down below 68 bucks. Pretty simple stuff. There's nothing crazy going on here, but this is looking okay for now. So I would definitely be aware of a potential lower high to higher low trend reversal setup. So definitely something to pay attention to with oil. And with oil, understand that the supply chain for oil has already completely changed globally. So most of any kind of upside move is purely speculation. Unless, same deal as I've said before, unless we see that there is UAE or Saudi infrastructure that is targeted and significantly damaged, where supply to the Gulf of Oman or the Red Sea was inhibited in any way. Everything else that's moving through the strait is just extra at this point until there is some sort of actual outcome that would allow for additional participants in the global economy. And you can determine what I mean when I say that, which I don't know how realistic that's going to be. One of the big things that I've mentioned is beware of oil bouncing and Dixie finding a low and then regaining 101. That's exactly what we saw. And with the reclaim of 101 and oil bouncing aggressively off of a major area of interest, what do we have? Well, the risk off, or the furthest end of the risk curve in terms of assets being, Bitcoin and cryptocurrencies selling off. So not a big surprise. Now it's about what comes next. This is still a downtrend. Beware that this could turn into a bull flag, and it's really all about closing above 102. Then 103 is the next destination. So that's it. You want to see a dollar under 100. You want to see a lower high come in and then evaluate on oil. You want to see a lower high come in on oil. You want to see Dixie trading back under $100 for a more acceptable risk environment for Bitcoin and cryptocurrencies. So that's my take on things. And I hope that you like and share this out there. I really do appreciate all of you that do that. And I will be back on Friday. It seems like I'm going to have a guest this Friday for the live stream. So typically, like, this video is going up at 9 p.m. Eastern, 6 p.m. Pacific. On Friday, I will be live streaming on X at 8 p.m. Eastern, 5 p.m. Pacific Standard Time. So I'll put that post up on Thursday. It's still Wednesday for me. So Thursday sessions are open for Bitcoin and futures, but the Thursday, on Thursday rather, I will post a little bit of a reminder about Friday's live stream, and I should have a guest. I believe it might be Bits of Wealth. I'm not sure. Just going to reconfirm with him and see if anybody else is going to be guesting with me. I really do value their opinion and their analysis. For the folks that have seen some of the guests that I brought on, really brilliant analysts, and I look forward to talking to them again on Friday. So I will see you again on Friday, which means you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe, and of course, as always, stay safe. With all of that being said, Landy out. Take care.